Hey, how's it going? Thanks for tuning in. I am Maurica.Cunningham, your Tampa Bay Realtor, and today I am talking on day 8 of the 12 Days of Home Ownership Series. Day 8, we are going to discuss appraisals. Now, appraisals are when the lender orders a professional appraiser to go out to the home and basically determine the value of the home. Now, the reason why a lender would order an appraisal is because they want to make sure that if they're going to issue you a mortgage, that the home is valued at the price that the mortgage is agreed upon or approved of. An appraisal definitely happens. It's part of the underwriting process. So you already had, you submitted your offer, you had your inspection, and now the appraisal is, like I said, it's a part of the underwriting process. When you get to the closing table, you are going to see the appraisal costs as a part of your closing costs. So it really depends on the appraiser that the lender used, what the cost will be. Usually it's shouldn't be no more than $500 to get an appraisal done. Now, there are situations in which the house is going to appraise above the list price. Now, when this happens, this means that you are going to have instant equity in your home. And that is the goal that all homeowners achieve to gain equity in their home. Now, when you have equity in your home, that means that the value of your home is less than the amount that you owe. So some people use their home equity, they pull it out and they use it to pay off bills, pay for the kids to go to college, unexpected expenses. You can use your home equity for anything that you want. But keep in mind that a home equity is a loan, so it will be something that you have to repay in addition to your monthly mortgage payment. Now, if your home is going to appraise below the list price, the contracted price, then that means that we have an issue. To try to remedy this issue, the buyer and the seller, they are going to have to agree. Either the seller is going to drop the price down to the appraisal value, or sometimes they meet halfway. So that means that the buyer would have to contribute or put more money down to make sure that they are not they can bring the price down to what the home is appraised at, if that makes sense. Hopefully, if not, just drop a comment below and I'll try to explain it a lot more if you need more details. Now, there are times when you can't come to an agreement with the seller and you're like, oh my gosh, this is going to break the deal. This is not necessarily the case, because there is a such thing called an appraisal contingency, and this is where you submit it with your realtor, me, I would submit it with your offer, and it's basically stating, I call it a CYA, cover your ass. So if there is a situation where you cannot agree on if the price should be lowered, then that contingency will say the buyer is entitled to their deposit, their escrow deposit. So that's another thing that you can make sure that your realtor includes in your offer. It's called an appraisal contingency. Otherwise, if you don't have an appraisal contingency and you are outside of your inspection period, then you forfeit your escrow deposit. So I hope this explains appraisals to you. If you have any questions, again, drop a comment below. Please be sure to like and subscribe to stay in touch for everything Tampa Bay real estate. Tomorrow is day 9, and we are going to talk about homeowners insurance and home warranties. So I'll see you guys on the next video, and thanks for watching.